Hello everybody, welcome to this fundamental analysis webinar. We'll get started at this time. My name is Troy. I'm a senior account manager with AvaTrade. I'll be leading the session this evening. As we get going, let's just do a quick systems check. If you're hearing me clearly and seeing my screen all right, just type OK in the chat box for me. Okay, great. I've got enough responses. Looks like we're up and running just fine. If anyone has any issues with hearing or anything as we go along, feel free to type a message and I'll do a quick systems check again. Lot going on today. It's a good time for a fundamental analysis webinar with the whole coronavirus scare and lots of things going on with the indices and gold and oil. It's a good day on the charts for some high potential moves. I think there's still movement to come. It's occurring as we were getting started. I was watching maybe some reversals again occurring on the charts. So we'll have a look at the technical analysis once we look at the fundamentals and maybe look at what could have been done already in terms of strategy with what we knew about the fundamental news coming out of the weekend. And obviously take a look at what you still could do moving forward, which I think there's plenty that still can be done if you haven't gotten in on the action already. Now, as we move forward, keep in mind, as always, all investments have risk. No one move is guaranteed to profit. I think we all understand that. Also, we understand that there's good potential for profit on most any move. You just got to get in at the right time and be in the right direction. And so that's what we're here is from an educational perspective to go over some ideas and information to hopefully improve upon your trading strategy and in the end, hopefully improve upon your P&L at the end of the day or at the end of each month. Now, as we go forward, keep in mind what we cover is not meant to be financial advisement. I'm not a licensed financial advisor or anything like that. It's coming from a perspective of education and experience with working with literally thousands of clients, seeing all kinds of strategies and with my own trading as well, understanding what I've seen work and a lot of things that I've seen that don't work so well also is important to understand. So we'll move forward from an educational perspective. Hopefully you'll add some tools to your tool belt, so to speak, to improve upon your existing trading strategy or maybe start building a new one if you're just getting going. And we have a good mix of seasoned traders as well as newbies in these webinars, and that's just fine. Any questions as we go along, feel free to ask. As we're mentioning risk, it's a good time to talk about the fact that if you're using our AvaGo app, and I'll show you where to download it, we have a feature using the AvaGo app, which is exclusive to AvaTrade and exclusive to that app if you're logging into your account using the mobile app AvaGo mobile app. You'll see a feature called AvaProtect. That's a feature that allows you on pretty much all the FX pairings, gold, silver, and eventually some other assets to have protection against loss on your trades for different lengths of time for a flat cost. It's a unique way to trade, and I'll show you that as we go along through the webinar as well. And our full risk disclosure statement can be found, by the way, on our main website. So what is fundamental news? We won't spend much time on the slideshow, trust me. We'll get on the live charts, we'll look at the incoming live news, and we'll get going with some real movements. But in general, fundamental analysis is looking at the news, looking at the information coming in other than the candlestick charts. Okay, it could be breaking news. There are a couple different kinds of fundamental news that we can focus on. One type we might refer to as regular economic events. These are scheduled, and we'll look at an economic announcement schedule today. These are scheduled announcements. We can look, we know the exact day and time that they'll be. We know what the topic will be, maybe jobs numbers coming in, factory production numbers. We know what country and currency it will likely affect. All of those things. Those are more structured type fundamental news that comes out. And then there's another type of fundamental news, something that we might call extraordinary economic events. And that's like the coronavirus. We didn't know that that was going to happen. We don't know when the next breaking news article might be. We don't know what the effect for sure is going to be on China's economy, which is why there's so much fear in the market right now. And it's having a potential effect on different stocks like Boeing, and demand maybe on fuel supplies, that sort of thing. People are afraid might drop as there are travel restrictions being put in place. So this type of extraordinary fundamental news, you have to be prepared for it with your risk management at any time. Could be news about Brexit, could be news about US-China trade deal, or in this case, it's news about a virus that who would have ever expected this to happen right now. So, and we'll talk about how you can account for those things, those types of fundamental breaking stories, how you can account for it in your risk management, even though you don't know what it will be or when it will be. Okay, that's important to understand as well, as much as the expected economic events. Okay, so let's go ahead. Let's take a look at some of the news coming in, what's been happening. And we could go to the economic calendar first. Okay, this was expected news that was coming. We knew what the topics would be, when the announcements would be, and you can find an economic calendar for those of you that are new to this on many platforms. Okay, forexfactory.com, investing.com, etc. So we take a look and we see, wow, look what came in today on the euro, in the red. Okay, we see what the prior announcements were, we see what the forecast was for the current announcements, and then we see what the numbers were. All right, so what do we see for the euro? What do you think the euro's been doing today? Just type quick. What do you think the euro's been doing today without looking at the chart, based on these three announcements that came in out of Germany? Yeah, weakness, right? Dropping. I have a couple people saying they can't hear me. Type okay if you're hearing me still. All right, great. That's enough responses. I'm just going to type a message for everyone. Okay, I just posted a message for everyone that the audio is fine. It's just a couple people who are having issues on their side. Okay, so yeah, obviously we would expect probably the euro dropping today. If there's a lot of fear on the markets today, which we see right here, you see the VIX index. For those of you that don't know what that is, that's the volatility index. When there's a lot of fear in the market, a lot of times that volatility index goes up as the other assets are dropping. Like gold goes up when there's fear, so does the volatility index. So Samantha, I'm glad you're hearing now. Okay, so if we see everything's in red in terms of the stocks and the indices, quick overview: red, 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 green on the fear index, the volatility index. What might you want to pair the euro against? If there's a lot of fear, what currency is a safe haven currency that tends to strengthen when there's fear on the markets? Does anybody know? If the fundamentals are telling us fear on the markets, no, not the USD, the yen. Good, Paul, and Bahola. Okay, the yen tends to be a safe haven currency. So you understand the idea here. If you see something that you think should be weak, pair it against something that fundamentally should be strong. Then pair the weak horse against the strong horse. So if you'd have saw these announcements earlier today, this was quite some time ago. It was scheduled. You would have known when to look. It was this morning at like 11 in the morning, or I'm sorry, 9 in the morning GMT time. Okay, this is New York time I have on here. So by the way, you can set these schedules to whatever time zone you want. So if you knew there was fear on the market, simple look. You know what this VIX index was earlier today? You know how high I saw it was up? This fear/volatility index, it was near 30% up on the day. It's pulled back some. It was way up, way earlier. It was obvious that the yen might be a safe haven. You'd pair against things that you think should weaken. So we'll take a look at what you could have done. And easily driven by the fundamentals that we've just looked at, you could have easily said, okay, sell euro yen. Okay, what else had some weak numbers? Okay, flat on the pound. Wow, look here. Home sales out of the US. Does that look worse than expected? Yeah, Martin, look at that. New home sales expected to be over 700,000, near 730,000. What'd they come in? Under 700,000. That's a 3 bullhead announcement. That means high impact expected on the currency. Okay. Also, when they're looking month over month, new home sales declined. They expected an increase of 1.5%. It wasn't like new home sales just went up less than expected. They actually went down. Okay, the opposite of what was expected. So these numbers were not good. Okay, there's the reaction maybe wasn't as strong as it could be because interest rates are low in the US still. So people in the bigger picture still think the housing market is good, but these numbers didn't help the USD. So if you were going against the USD, again, what would you pair it against? The yen, right? That might make sense because we expect the yen to strengthen, especially earlier today when you saw the VIX index was at like almost 30% in the positive. And everything, trust me, all the futures were in the red even this morning. Okay? So quick snapshot, when you look at on investing.com or other places and you see all red on the futures and you see the volatility index in the green, that tells you something about momentum for the day. Okay, it really does. All right, so this is the type of fundamental news we talked about that you know the timing, you know what it's about, you know the effect it is expected to have. Okay, you could have looked at this way earlier today and made some moves on it because these announcements came out way earlier today. Okay, so then let's go and see what else. Here's the headlines. Even if you didn't look at the announcement schedule, the headlines come out. All right, it was updated not only 8 minutes ago, but the article came out much longer ago, much earlier. U.S. new home sales fall unexpectedly. Low mortgage rates lend some support. Okay, that doesn't look good for the strength of the USD, right? And if we look here, travel, tech stocks, again, one thing I always point out in the webinars, use a variety of sources that you trust. Don't just look at one necessarily. Make sure it's a consensus on more than one source. And again, we see fear, okay? This is a big thing when you see fear in the headlines. Travel, tech stocks lead Wall Street lower as China virus fears mount, okay? These articles have been shown all day. It's not something new. It's been there, okay? It was updated an hour ago, and there were other articles as well. So this fundamental news has been there. And so expecting with this type of headline, you might expect, what do you think indices would do with this type of fear and headline? When you see travel, tech stocks lead Wall Street lower, what do you think is going to happen through the day with the fear index high? Yeah, dropping. This stuff was very, very much predictable. Okay, so this is the power of fundamental news. Now let's go to the charts. What happened with gold at the open? What do we call this right here? From Friday's close, that's the 24th, to the open today, what happened to the price? It gapped up. What does that tell you about momentum? Right? It tells you a lot about momentum. The gap was up, and it didn't just gap like $1. It gapped about $8 from the closing price, even more, $10. From the closing price Friday to the opening, it gapped up $10 on 1 ounce of gold. Wow. Okay. As soon as you saw that, if you started selling on the indices today, you think you would have profited? I'd say so, right? So this type of momentum on a safe haven gives you a clue about what's going to happen to the riskier assets like indices and stocks. They're great to trade on too because the movements can be huge and in predictable directions. Indices give you the combination of high volatility but also predictability, and we'll look at that, okay? So given the fact that gold gapped up, okay, once it returned anywhere near a support level, like here's a support level, okay, and maybe I need to raise that up just a little bit. Resistance from Friday, right? Resistance, 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 gap up at the open. Anytime it got down near this support, wouldn't it have been wise to buy? Given the news that you understood, high fear about the coronavirus spreading, fear that travel is being restricted, the second largest economy in the world being China is restricting movement within their country. It really could have an effect on their economy. So what do you expect gold to do as it reaches major support levels? Exactly. You go with the fundamental news sometimes, and it's no surprise what can happen. So the exact line where you draw your support would have changed maybe as the day went. Okay, it started to be the support was up a little higher, but as it got anywhere near this old resistance level, if you were buying, you profited. It comes down, you profited. It comes back down where it was just before we started the webinar, it's up again, trying to bounce. Okay, so your technical analysis, you can be looking for what you think is an opportunistic entry point based on the direction that you think the asset should move based on the fundamental news. Okay, now obviously the closer you were to this support level here, this old resistance level, which became support, okay, it's not a coincidence it didn't break that level right here. It tested it, it sat on the resistance level or the old resistance, which becomes support, and it fired itself right back up. Okay, so it's up to you what you think will happen, right? If you're going with the fundamental news, you're buying off the support. If you were buying off the support, where might your take profit be if you were scalping, if you're doing a shorter term trade? If you're waiting for it to hit the support and buying, where might you take profit on this? And right now, it's not on the support, by the way. A patient trader would wait for it maybe to approach the support level again. The next resistance level, right? Yeah, 1585, some of you are saying. Let me draw a line about there. Okay? 1585 makes sense to me because it's just before the resistance level that it hit today. Look, it broke that on the initial momentum, and then it found resistance right around 1586. Resistance, resistance. So if it's going to, let's say it comes down to the support level, what, by the way, what kind of pending order could you have down here right above the support? So if it gets back down to that support level again, if you want to buy off that support, what kind of pending order would do that? I can show you how to set it up. Okay, change from market execution to pending. A buy limit, exactly, Paul. Rick, yep, you're right on. Andrea, buy limit. Okay, so you have four types when you switch to pending order, four types of pending orders. If you want to buy from a lower point than it is now, which could be the case now, if you wanted to wait and see if it'll approach the support again, then that's a buy limit, buying from a lower point. So then you'd program the at price for whatever spot down here just above the support level that you think is your sweet spot. Okay, I'm not here to tell you what your sweet spot should be. I tend to get in just before the support, a little above, because if you try to be too perfect, you can miss the movement, right? If it's going to bounce, sometimes it bounces early. Okay, so that's something to look at. If you believe that fundamental news is still there, that there's fear in the market, and that volatility index is still up something like 15% on the day, you could wait for your spot that you think is good and get in. Okay. And by the way, if you were going to do that, where might you put your stop loss? If you programmed a buy limit to buy from a lower price right down here, just above the established old resistance, new support, where might you put your stop loss? If you use stop losses, not everybody does. Yeah, just below the support somewhere. And I might contend below the gap from Friday, right? Because it could test this support. And if your stop loss is too close, it stops you out, then climbs sometimes, right? If you put it below a second support level, which would be the opening price, let me draw a line. This was the closing price on Friday. So if you put it below this support level down here, or I'm sorry, below the gap level, this was the resistance level. This was the gap level where it gapped up from. So right down below that price. Okay. That's a longer exposure, but less likely to have a false signal hit it. Okay. Now, because that's quite a distance, what could you do so that you don't have to risk too much to have your stop loss below that next support level so that you don't get caught on a false move? What could you do with your trade size so that you could afford to have your stop loss that far away and be more patient? To widen your strike zone on your stop loss, what do you do with your trade size so that a stop loss that's maybe 3 times further away doesn't risk more? What do you do with your trade size? Yeah, half the trade size or a third of the trade size. And what you might see by doing that is many times you avoid the false spikes that go down and hit your stop loss if you had it too close. You avoid getting stopped out on those. And then it has time to go with the bigger fundamental news that you know exists. And lo and behold, many times it ends up going the right way. And because you widened your strike zone, you're being less greedy, so to speak, by having a smaller trade size, which means the potential profit is smaller, but maybe you have a higher win percentage that way. It could improve your P&L even if the profit potential per trade is less. Okay? And I'm not here to tell you what trade size is right. Okay? That's for you to decide. But many times by widening the strike zone on your stop loss, getting not just one support level, but 2 support levels behind you, you can avoid those false signals more and many times come through on something that you otherwise would have been stopped out on. Okay? By stopped out, I don't mean when your margin level percentage is too low. I mean when it hits your stop loss. Okay? What else could we put if you wanted to take the larger trade size, but you still didn't want to risk a large amount, and you also didn't want a false signal to put you out of the trade? What could we put down here below that buy limit in case it breaks the support? What could we put as a sell stop? What do we call that if I put a sell stop for the same size and I put the stop loss on the second one? If it goes back up, I close that second trade. And if it keeps dropping, I'm covered because I have a trade size of the same size as a sell too. A sell stop would activate second after your buy limit trades up off the support. If it breaks, hedging. That's exactly right. I've got many of you typing it already. That's hedging instead of using a stop loss. And that's why I said not everyone uses a stop loss. If you believe in the bigger picture, all this fear has to bring gold up higher, or at least to today's high. Okay, if you believe that, and I'm not saying you should, I'm saying if you believe that based on the fundamental news, then why should you put a stop loss on the buy? If you think even if it breaks the current support that it's going to go up, if you're convinced of that and you believe in the up more than the down, then you put a hedge trade down here as an option. The buy limit kicks in here. Maybe it breaks, it hits your sell stop, drops, and now you're breaking even. You didn't have to worry about risking too much on a wide stop loss. You didn't have to put your stop loss way down because now you're covered. There's no stop loss on the buy position. If this goes back up and breaks back above the support, the stop loss is on that hedge position, and the hedge position sells, and now you're in profit on the buy, and you never had to close it. You never had to risk any more than the distance from your entry to the spot the hedge trade kicked in. And if the hedge trade drops, you can take profit at the next support level on your hedge trade, right? Expecting in your mind that it'll bounce off that next support. And now if it even gets halfway back up, even though the initial buy is in the negative, you're in overall profit on that trade set. Okay? And if it breaks, if you take profit on the first hedge make sure you have a second one set up as another sell stop below that support level. In case it doesn't bounce and it breaks, it'll open and cover you with the next sell stop. And I've seen people do this through 2 or 3 support levels, and eventually it bounces up maybe halfway, bringing back half of what you were down on the initial buy in this case. And on the trade set, you can close that buy at a loss, and overall you're in a profit on the trade set. Okay, that's like playing chess instead of checkers. Thinking about 1, 2, 3 steps ahead. The first trade is your pawn. You don't have to be right on the first move because you already thought about the second and third move in case that one doesn't go the right way. This is where I've seen, and you probably saw on that first slide when we started the webinar, about 30% or so of traders profit long term. Okay? That's the type of trading system I've seen when people profit long term. They're not trying to be right on that first move. You don't have to be right. You have to be smart. Right? So being smart is more important than being right when it comes to trading. And you don't have to just be stubborn that, no, I'm buying and that's it, and I have to be right. And you let it keep going and you keep sliding your stop loss further down and further down, and you don't hedge and you don't do anything to cover risk. That's how you blow accounts. Okay? So don't be afraid to counter a move with a hedge. Take profit in the wrong direction as you might think in your mind. And eventually that direction in your mind might swing and be the right direction. And you can close the initial trade if the fundamental news changed. Okay? And eventually, if it does bounce back up, you don't even have to profit on that first one to have overall profit on the trade set. Type OK if you understand that idea of hedging. Or questions if you have questions. All right, good. I like OK. That means I was clear. But certainly if anyone has questions, please type them. We see predictably gold's pulling back down towards this support level, right? That's why we were saying maybe it's not the best situation to buy yet if you're thinking to buy. Delwyn, there is no one best way to hedge. Some people do full hedge. Some people say, okay, no, I'll only hedge partially. I'll open half the trade size, because if you're still more convinced it'll go up than down in this case, then as it breaks the support, maybe your sell stop only has half the trade size as your buy. That's okay too. That way you're covering half the risk if it keeps dropping. And at the next support level, you could close that hedge trade and have another hedge trade below that support level in case it breaks again, right? So there's no one right way. That's up to each individual trader. But the important thing is understanding the concept of how to do it. And as long as you know how to do it, the exact numbers on it is up to you. Okay? Certainly, I'm not here to tell you what trade size you should do, what percent of your move you should hedge. I'm not here to tell you how convinced you should be that this will keep dropping or that it'll go back up. That's for you to decide based on the fundamental news we looked at and the technical analysis I'm showing you. Listen, Lesego, you're asking what's the best time to trade with the fundamentals. Certainly, you start to see more momentum on the movements after the U.S. market opens and while the European market is still open. You have a lot more volume of trading and the movements seem to sustain themselves better and maybe be more predictable. Okay, I've developed an EA that trades off of momentum with gold and taking into account some other assets correlating with it. And the momentum, the movement seems to be stronger. The larger the volume of trading, and the larger the volume of trading, the larger volume of trading tends to occur when you have the largest markets overlapping each other and open. So, 9:30 a.m. New York time, the volume of trading increases and you get some momentum on the markets. Okay, after the European markets close and you start getting later in the evening European time, the volume of trading starts to die down. And as you get close to the US market closing, it really fizzles out in terms of the strength of a lot of the movements and the predictability. Okay, good question. because a lot of traders have a great strategy, but they don't understand you got to trade at the right time. A strategy that works good through the morning hours might not work as good in the evening, and vice versa. Okay, so you run the strategy and see what time of day does it win better, and use it then. Okay. Gold tends to move with all the markets because it's a global safe haven. Good question. But certainly you can get larger movements again when there's a larger volume of people trading. And so the same idea would apply. Okay, so as this gets nearer the support level, we've been watching gold drop towards the support level since we started the webinar. As it gets closer, you might make up your mind it's time to buy if you think gold should go back up today. And I'm not telling you you should think that, but if you think that, you might say, wow, it's approaching this support level here. Maybe now's your time to get in if you think gold should go up, right? It's dropped quite a bit while we were talking. And so that's up to you. I'm just pointing out that you don't have to wait and be perfect that it gets on the support level. And if you decide, okay, maybe now's the time to get in, you start to zoom in on the candles, on the smaller candles, and say, you know what? It's starting to show maybe that it's an uptrend. Maybe the low points are getting higher from here up to here. Maybe it's not going to come all the way to the support. That's up to you to decide your exact entry point, right? And by all means, if you think gold's going to break the support and crash back down, then put a sell stop right down here. And you know what? Even if you don't think that gold's going to come down and break the support, couldn't you still put a sell stop, even if it's not a hedge, just to get in case it breaks the support? Because something must have changed if it breaks the support. The momentum of the day must have changed. Remember what I said. You don't have to be right. You don't have to guess the market. You don't have to predict it. Prepare for it. Remember we talked about the second type of fundamental news, the kind that is not scheduled. Couldn't an article break right now that says coronavirus seems to be contained? What do you think would happen to gold if an article came out like that right now? If they say US and Chinese officials feel virus is largely contained, fears are dying down, what do you think would happen to this support level and gold? Yeah, it would drop like a stone. And can you predict when that might happen? No. So doesn't it make sense, even if you were going to buy now and have a stop loss instead of a hedge? Okay, fine. Not everyone likes to hedge. So maybe you weren't going to prepare a sell stop as a hedge. You have a stop loss on your buy. That's fine. But couldn't you anyways, even if you had a stop loss on your buy, have a sell stop down here in case the news changes? This is what I'm talking about. Preparing for both types of fundamental news. Build into your trading plan the ability to be wrong and still profit. Okay? And maybe with that kind of news, you'd say, okay, I won't start my trade here. I'll start my trade if it breaks below Friday's close. Because if it's that type of news, it certainly should break back below Friday's close, because this climb was in response to the coronavirus. This rush up in gold was because of the coronavirus. So if truly something unexpected came that was good news about it, maybe your sell stop should be below this support level, because then you know it was a large amount of momentum. This area could just be a false signal from something smaller, right? Keep in mind, have your stop loss far enough away to prevent getting in on false signals, temporary breaks of the first support level. Maybe get in for the opposite move after two support levels are broken. That means there was more momentum, strong momentum, a true reversal maybe. Okay, just some ideas that might improve just by a small amount the entries on false signals, which then can have a huge effect on your P&L. You'd be surprised. The difference on your P&L could be 30-40% difference by having a 3% or 5% less false signals getting in on false moves. Okay? All right, any questions at this point? Okay, and we see gold still trying to approach our support level. All right, let's look at oil. Why did oil gap down? Why would oil gap down? Because of fears about coronavirus. I kind of alluded to it already. What are the airlines doing? Restricting travel to certain areas, to China. What's China doing? Restricting their people from traveling around the country. It's kind of a mess. And so when you've got, exports can be affected. All kinds of things are being affected. Okay. And so the indices are dropping, have dropped already. I mean, oil gap down. Again, if we followed the same strategy, huge fear. Okay. Volatility index was 20, 30% up. A huge gap down. I'm not trading the strategy to fill the gap on a day like today with the volatility index as high as it was. When it gapped this far, I'm not thinking, hey, it's going to refill the gap. Let's trade that strategy. And you actually never would have seen an uptrend back above the opening price. So even if you wanted to trade the strategy, typically the strategy is if it breaks back into the gap with an uptrend, then you trade to fill the gap back to this price. But it never uptrended. It opened and plunged. That's a sign. Okay. So simple strategy, how you could have profited. Resistance level at the gap price. Okay. So the gap price was here. It gapped down. As it got near the gap, anywhere near the gap, the opening price, you could trade down. Okay. And it would have fizzled, and you would have profited. Back up near the gap, trade down, as long as you didn't have your stop loss too close. Again, stop loss maybe above the price that it closed on Friday up here. So it goes up, tests with a false signal, and right back down, profit. Look what it's getting near again. What is this movement about to approach? The opening gap price. So at some point, if you think the fear exists still, you could make a move that makes sense to you. Okay? Could be a huge movement again. Okay? So this is oil, an approaching opportunity maybe here if you think oil should drop back down again off that resistance. It did a couple times already today. And you don't have to risk much to get back above this false signal up this direction. Okay? Someone's asking, why did NASDAQ crash? NASDAQ has a lot of stocks like Boeing, which are going to be negatively affected. The tech stocks are going to be negatively affected if China's economy, which is the second largest in the world, if China's economy is going to be affected. And really the global economy is affected with something like this norovirus that's kind of shutting down global travel somewhat. Okay? And let's take a look then. NASDAQ. Look at that. It gapped down. If with the downward gap followed by a run down, no invasion back to fill the gap, that is a sign. Again, that's a sign. Anytime it got anywhere near a resistance level, trade down. Okay, it tried to come back, formed resistance here, resistance. It approached this resistance level here, sell. Look at the profit you'd have made. Okay, again, it formed resistance, resistance. It approached the resistance, sell, profit again. Okay, as this approached this resistance, if you sold, okay, you might be hanging on with your stop loss up, or maybe it was close and you took one loss. Hey, I'll take that. If we were trading down from the resistance on this today, based on the news and the direction of the gap, I already won 2 or 3 times. I'm okay losing once. Nobody's going to win every trade. But you can see by trading the direction of the gap and with the fundamental news, what would have happened today on oil, on the major indices, on gold, okay, etc. Very simple strategies. What are you going to do if this approaches this resistance level here? Okay, if it gets up here, if it tests this resistance, First thing I would do is check the news. Make sure nothing new came out. Make sure the fear index is still up, the volatility index. Double check that all the numbers, the indices are in the red. Look at everything. Make sure there's no new breaking news to change your mind if this approaches this resistance level up here. And if everything looks to be good to go, that you think the fear is still high, then you can trade down from this resistance level if you were wrong on this one. Okay? In my case, I wouldn't have been wrong yet. Okay? Because I would have had my stop loss somewhere at least halfway through above this resistance a little further. Okay? Here's the old support. It hasn't really broken much past that. Now, if it does, you got a second shot, another resistance level, if you think it should drop. Okay? So, listen, some of you are asking, do I think it'll recover this week? Don't I? Follow the fundamental news in the morning, as early in the day as you can. Take a look at that volatility index, see what's happening, right? And then look at the technicals. Did it gap up that day? Okay, did it break a major resistance level and show momentum climbing? Combine what you see on the fundamental news with what the technical analysis is showing you. Look at how the technical analysis is confirming the fundamental news all day long. You could have been trading down from resistance levels on these assets all day, and you'd be profiting each time. Go with the fundamental news with the proper technical entry points until it breaks. And today you see you'd have been winning all day long on oil, on gold, on the indices, etc. Okay, and a lot of individual stocks if we had time to look at them. Very good questions. What do you think's happening with copper? And I haven't, honest to God, I haven't looked at it. What do you think's happening with copper? Dropping. Why might you think copper would drop when there's fear about the markets? Paul, anybody else who already commented? Copper? Yeah, it's used largely in industry. Copper is used huge in industry. So a lot of times when gold goes flying up, copper comes flying down. Not always, but usually. And so if you saw gold was flying up, but copper hadn't dropped off a resistance point yet, then now you have a leading indicator, right? If you start putting charts next to each other of gold and copper, one of them might make the move before the other and clue you in as to what the other one's going to do then. Then you can get in early. Okay? This is the idea if you've ever heard of cross pairs trading or cross asset trading. One might be a leading indicator of the other, or they might alternate. It's not necessarily one always leads the other, but whichever one moves first can give you an indication of the other. So let's pull up copper and see what happened today. It gapped down and kept dropping. So as soon as you saw gold gap up and copper gap down, and then you see that it kept running and didn't start to fill the gap, this is telling you something, okay? And so all day long, if you saw copper come up, right, and gold was still climbing, then you know, I should sell on copper. Gold's climbing and copper climbed too. Copper, I think copper should drop off the resistance. Type OK if you understand what I mean by one asset giving you a clue as to what the other asset might do. Or if you don't, please type your questions. What do you think happens to the Australian dollar when there's bad news for China? What do you think the Australian dollar will do? Down. Why? Because the number one buyer of Australia's number one exports is China. China buys iron ore, coal. The largest exports out of Australia are picked up by China. So if there's bad news for China, typically there's weakness on the Australian dollar. What if we put the Australian dollar against a safe haven currency? It plunged. Look how predictable. Look at that. Again, we could put, and I didn't show it. We looked at bad announcements out of the European Union. Trust me, the euro dropped like this too against the yen. We talked about that in the beginning. What might you pair the euro against because of those fundamental announcements that came in? The euro looked just like this today, okay, against the yen. Why the yen? The yen should be strong if the fear index is high, right? So it gaps down. Here's the resistance level. Resistance, trade down, profit. Resistance, trade down, profit. It forms a new resistance, trade down, profit. All day long on these assets. Why does it keep going that direction? Why was it predictable? Fundamental news, fundamental analysis. Okay, Lisego, copper is used like in copper wiring. And other parts of industry, if a country's industry is expected to shut down, to do bad, there'll be less demand for copper, so copper prices would drop. And at the same time, if the economy is doing bad, gold tends to go up. Okay, so usually bad economic conditions, gold goes up as a safe haven, copper drops because of expected less demand for it. Okay, very good question. All right, everybody, I think this is a good place to stop. You can look for your entry points on these assets still. If you feel here's the next resistance level, support, 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 broken support, resistance, resistance. Okay, if you feel that this news is still running, and again, check out the latest headlines, look at the fear index, which way is it going? Get in with the fundamental news in the direction you expect. And honestly, it might be a little better to do it earlier in the day. Take a look at all the headlines, all the major news. What's the fundamental momentum of the day? Look at it if anything gapped in a certain direction, then look for your entry points. Okay? But I do believe there'll be some large movements still today. Pick your spots, okay? All right, thanks everybody for joining. Thank you for the participation with the good questions and the good points. It helps everybody out. We'll be doing webinars tomorrow and Wednesday also at some different times. So please attend if you can, and keep in mind on our YouTube channel, all of these webinars are uploaded. So if you missed the live webinar, by later in the day, if it's an earlier webinar within a few hours, or by tomorrow morning for this one, the webinar will be uploaded to our YouTube channel. All right, bye. Good night. Thank you for attending, and see you next time. Good luck with your trading.